Dear students, in today's session, we will learn how to score marks in PGBP. There is a trick here. It is an easy trick, but most of them are unaware. And if you follow the tricks that I gave you with sincerity, you can score easily. Section 28, which says the net profit of business or profession are going to be chargeable to tax. So chargeable to tax means charging section. Charging section means this is the section that brings your income under charge of tax. You pay tax on your net profit. Basic thumb rule in income tax: any expense incurred for the purpose of earning income is always going to be allowed as a deduction. It does not apply on gross income or sales. GST applies on sales. Tax that implies on turnover is GST. Income tax will come on your net profit. To give you a simple example, in profit and loss account, there will be a sales, that is our gross inflow. GST is applicable on this amount, but we are learning income tax. It applies on net income. We will adjust cost of goods sold. We will adjust overheads, depreciation. Now tell me, what is the net profit you are getting? 10 lakhs. Dear students, what is the difference between GST and income tax? GST will applicable on sales, but in income tax, the net profit of a business or profession will be taxable. Means all the expenses incurred for the purpose of earning income will be allowed as a deduction, and the net profit that your business or profession generated for you is going to become your taxable income. What is taxable? Net profit. But this net profit will trouble you. And now what I am going to discuss may not be any section or provision of the chapter, but this will lay down the roadmap of the chapter. What we have to learn in PGBP. Please pay attention. What is taxable income? As per the charging section of PGBP, net profit. Where is net profit available? In the P&L account. Profit means excess of income over expenses. And in the example that we have here, can I say 10 lakhs becomes our taxable income? Bro, P&L account, how to make I know since 11th standard. What are you going to teach for me 14 marks for final and inter? If net profit is taxable, net profit figure I have since 11th standard, then what you are going to teach me, bro? This net profit is the figure that you have picked up from profit and loss account. Yes or no? Yes. Now focus please. In the P&L account, is the P&L account is not under the control of assessee? I am asking you, who makes the P&L account? Let me give you options. Assessee, assessing officer, AO. It's under assessee control. Even if the accountant does it also, on the instruction of employer, my options are only assessee and AO. AO is not a god, but he will take birth in every house to eliminate the evils to make profit and loss account. Can I say P&L account is under our control? Debit belongs to me, credit belongs to me. So somehow if I eliminate and make this to zero, please pay attention. It is very important because it is going to lay down roadmap for this chapter. Somehow eliminate this 10 lakhs and reduce to zero. Write anything on debit side. Write anything on debit side. Give to present level, give to X level. Now stop counting the numbers and pay attention. Give to relatives, give to father, give to mother, and make this amount zero. Now tell me, what is the profit and loss account? Zero. And what is the charging section saying? Net profit is taxable, and we have ended up with taking zero. Dear students, the P&L account that you made since 11th standard, you can do anything, whatever you want. If I got other heads of income, maybe interest income or dividend income or agriculture income or rental income, I am going to record everything here because final accounts maybe record all the heads of income. Will all of them come in profit figure? The whole issue is some way the profit figure which we picked up from our P&L account can contain errors. It may not be in accordance with tax provisions. There are 4 types of errors. First one, something you should credit here. Let's say sales was 40 lakhs, you missed 10 lakhs. Is that a mistake in your profit figure? And you have not written. Second one, something that you should not credit here, but you have credited, like other heads of income and exempt income. They should not come. That means they are making mistake in the profit figure. You should not credit, but you have credited, or you should credit here, but you are not credited. And the same mistakes on the debit side also. Totally, there are 4 types of mistakes in our profit figure. Sir, in PGBP chart, final or inter in direct tax, what we are going to do for 14 marks? Dear students, you are not going to learn how to find out the profit figure as per P&L. Your task in final or in intermediate will be picked up that profit figure. That is how we always start PGBP computation. The starting point is always going to be net profit. Net profit as per P&L account, and identify if there are mistakes in the accounts. Mistakes which are not in accordance with tax provisions. Eliminate those mistakes. Some assessees may not know what are tax provisions. In accounts, they have done anything. Can I say accounts are under your control? You can do anything, whatever you want, but tax will require you to change those mistakes and make it in accordance with tax. You will have to make some adjustments on the add side, and you will have adjustments on less side. To be specific, there are 2 adjustments. Totally, there are only 4 adjustments. Add side, one is related to expenses, one is related to income. Less side, one is related to expenses, one is related to income. Totally 4 adjustments, and basically you are correcting mistakes of your P&L account, with which you will be able to find out your taxable income in PGBP as per tax provision. Question: as per the charging section 28, what is taxable income of PGBP? The answer is net profit. Next question: where do you get profit amount? The answer is profit and loss account. Next question: who makes that P&L? The answer is assessee. Next question: can assessee do nonsense in that P&L? The answer is yes. So what is the chapter PGBP that we are going to learn? Correct those mistakes. Pick up the net profit as per P&L as the base figure, and whatever the mistakes, correct it. How many total corrections? Only 4 nana. 2 on add side, 2 on less side, and that together, dear students, will give your taxable PGBP income. Let's see what you have to do. Any expenses which you have debited in P&L account, just answer what I am asking. What does this do to your profit figure? Sir, reduces the profit, but this expenses is disallowed as a deduction against your PGBP. So you have to correct that mistake by adding. Sir, can you give example? Yeah, sure. If you don't give gift to lover, can you still do business? Is it necessary for the purpose of earning income? The answer is no. If you don't give gift to mother, can you still do business? The answer is yes. If you don't give gift to wife, you may or may not stay in your house, but you can still do business. The answer is yes. Expenses are allowed only if they are incurred for the purpose of earning income. Wrong debits are going to add back. And one point about income: any income which is not credited in P&L account means you have not written in P&L account. That means, can I say this amount has not come in profit figure? The answer is yes, but it is going to be taxable under section 28. Sir, can you give example? Yeah, unrecorded sales. Sales was 35 lakhs, but you wrote only 30 lakhs. So that 5 lakhs not written. Is that a mistake in your profit figure? What does the mistake, or what did the mistake do to your profit figure? Sir, it reduced the profit. Yes, you're right. So how will you correct that mistake? Add back. So these 2 mistakes will be corrected. We will be adding them and we will be taking total. Never keep multiple amounts in outer column. Always simplify them, take a total. Now let's look at the left side. One income related and one expense related again. Last time we did expense first. Let's do income first. Any income which is credited to profit and loss account. Credit means, my question is, has it come in your profit figure? Answer is yes. But this income is not taxable under section 28. If you just write not taxable, it will be wrong, because if you write not taxable, that means you are subtracting only the exempt income. Dear students, you have to subtract two things from P&L account. Anything which is exempted income, you have to subtract it. Second one, income not taxable under PGBP but taxable under other heads, that also you will have to subtract. Listen carefully. Whether exempt or other heads, in both do not come in PGBP. So remove both of them. Of course, exempt income we minus here and we won't add anywhere. Other heads we will minus here and we will add in the respective heads. That is agreed. Understood? But that is not my question. My question is, in PGBP, what will you do? The answer is less subtract. Anything which is not taxable under section 28, which can be two reasons. One is exempt income or taxable under other heads, and any expenses which are not debited. You written in the P&L account any expenses which are not debited. Means, did you written in the P&L account? The answer is no. But they are allowed as a expenses. For example, just like you have unrecorded sales, is it possible unrecorded purchase? Let's say purchase 16 lakhs. But by not writing purchase figure, there is a mistake in your profit figure and the profit figure is increased. How to rectify that error? Reduce it. Dear students, that is your PGBP. If you don't understand these, then you won't understand what we are doing in the rest of the chapter. Through sections, you may understand, but you will not understand how to get marks. This discussion, if you observe carefully, I did not taught you excluding charging section. Till now, I am not doing any section and I am teaching how you will get marks.